Shares in Target under pressure. Sales dropped in the retailer's latest quarter. Profit lagged expectations. Meanwhile, competitor TJX, which specializes in off-brand clothing, or I should say clothing that's remaindered or sent on by other retailers, that company posted upbeat first quarter numbers and it lifted its annual profit forecast. Let's bring in Justin Elliott, portfolio manager at Caldwell Investment Management. Great to see you as ever. Thanks for joining us. Target, briefly, what do you think? Are investors missing value here by selling the stock?
No, I think Target's definitely had some issues. As you pointed out, on the discretionary side, which is 50% of their business or so, continue to see softness there as consumers pull back on those more discretionary, kind of non-necessary purchases. On the more essential side as well, you noticed an incremental pullback there. And as they've just announced, they're going to reduce prices on about 5,000 items over the summer in hopes of kind of gaining back that traffic. But what we've seen in this inflationary environment is customers are really trading down to the low-cost leaders, the Walmarts and the Costcos of the world. And they've even seen continued traffic with some higher income consumers that typically might have shopped at a Target. And so I think it's going to be tough for Target, who basically reiterated their full year guidance, to hit those numbers, just given some of the headwinds they're facing on the traffic front, but then also the margin front with those softer discretionary sales.
What about TJX? It has been a favorite of investors, betting that investors or consumers, will trade down, look for lower priced clothing.
Yeah, so TJX definitely had a good quarter. As you said, the trade down play has really been kind of the key driver for that story. But what you've noticed basically is with the retail environment changing as it has been, people going bankrupt, companies sort of downsizing, TJX has become a more important player to a lot of vendors. And that's allowed them to go out there and buy merchandise at attractive margins, but also get better brands than they historically would be able to buy. And that's basically allowed them to offer what they call kind of the good, better, and best assortment. And they've really stepped up their offering on the better and best side. And that's allowed them to attract, I think, some higher income consumers. But interestingly, what they kind of discussed on this morning's call was there's a bit of a flywheel again, with more of the better brands kind of coming into the store as they work with new vendors. Some of those better brands are more comfortable now offering their products in a TJX, in a Marshalls, where maybe they didn't want to be the odd one out. Now they're among some of those higher tier brands. And so they see that flywheel kind of picking up. They see more traction basically with that better brand, and that's attracting customers that normally do business with in the past.
Would you be a buyer of TJX right now, Justin?
So it's a stock that we used to own in one of our funds. We do like the fundamental story, and we think it has, still a nice runway to play out. We run more concentrated portfolios, and so we kind of, put our eggs into our highest conviction baskets. But I do think that this is a good stock, and I think it's a good hold for sort of the next 3-5 years. Costco,
pandemic darling, we know that. It's still hard to get into the parking lot. What's your view there?
Yeah, so Costco, as I was saying, always been a low-cost leader, and they always look to pass along that value to the consumer. And that's something that people really appreciated in the higher inflationary environment. So people were going where they could get the best deals. People that hadn't been previous Costco shoppers had really discovered that value proposition and continue to shop there, continue to stick around. So Costco is really seeing very strong renewal rates on new memberships, very strong retention overall. They're noticing a lot of people that tried the brand and had their basic membership have upgraded to now that executive membership that gets you a little bit more rewards, but also kind of drives more frequent spending in the store. So Costco really has been a long-term winner. They've got a great business model, but I think they've just kind of had some acceleration with everything that happened during the pandemic, and they've kind of level stepped higher. So like the story from here as well.
What about Walmart, the Uber discount retailer? Is there value there?
Yeah, with Walmart, it's the same story where they've made a lot of investments in their supply chain over the years to really drive those prices down, to really become more relevant on the digital front. And so they've become a lot more convenient if you're looking to pick up your everyday essentials, right, and get them delivered quickly at a good price. And so I think that's something where Walmart has invested in on such a large scale that it's really tougher for some of the smaller peers to kind of catch up. Even the major grocery stores aren't investing to the same level that Walmart has invested. And so when you think about the stock now, I think potentially you're seeing a change in kind of the long-term earnings growth rate, just given some of the higher top line they've put up and the outlook for that, as well as some of just the better margins that they've made as they now kind of lap that investment cycle. So also a good name here.
You have one. We're very tight for time. I'm sorry about that. You have an idea for us. Fix on the New York Stock Exchange, Comfort Systems. Why do you think this one offers some potential?
Yeah, so as the head of CPP was just saying, data centers are really undergoing a boom right now with all of this AI investment. And so they've seen a very strong uptick in investment from a lot of the hyperscale cloud players who are looking to build out data centers, but also things like manufacturing, reshoring, food supply, and pharmaceutical supply in the U.S. So they do a lot of the HVAC work, the electrical and mechanical work in those buildings, and they've just seen an extremely strong increase in demand, which leads to better visibility down the line, as well as a kind of better earnings growth profile. So a name we really liked and have held for quite a while here.